following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 21st fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need to lead an inspired life. And leading an inspired life, folks, that is what it's all about. Well, today's tool, because we're going to get into the markets here real quickly because we've got things moving down, and I know each of you want to know where the markets are going to, what patterns are out there, and so we'll get to that just in a moment. What I do want to say as we come into this, the holiday season out here, that and just as the message of Friday, the greatest gift, there's no question in my mind, this is a gift-giving season, that the absolute greatest gift that you can give to someone is the gift of your time. And so I want to express my gratitude to each of you out there who have been kind enough to give me, your time to join me in the mornings at 9 o'clock. All my client subscribers out there, anybody's life who I've had the opportunity to touch, because the reality is you've touched me. You have allowed me, during this year as I look back, you have allowed me to grow and contribute in ways beyond even the ways that I had wanted to. And that means that I'm a very happy person, because happiness, folks, it's just simply about becoming the person that you want to become. So this holiday season, whether you're with yourself, because that could be a great gift that you can give just simply to yourself, or as you are with others out there, be present with them. Give them that present, that gift, and give them the gift of your time. What a great thing to be able to do with your children out there and teach them that message. So to me, that's really the message of the holidays out there. And so again, very grateful for all of the gifts that each of you have given me. Thank you very much. Only hope that I can return at least half of what it is that you've given to me. Let's go take a look at these markets here. Right now, we've got the Dow futures are down about 195 points with fair value. You've got about 170-point opening as we speak right now, but we got 20 minutes left here in the pre-market. The ES Mini off 22 points right now. NASDAQ futures off 41 points. The Russell 2000 down 14. Now, of course, the futures, though, folks, they are off quite a bit from off of their session lows, I should say. If you were to take a look at the actual Dow futures last night at about 8:20, you had the Dow futures down about 300 points. But let's take a look at the ES Mini. We're looking at the 30-minute chart out here. This way I can show you, exactly where things are moving. We take a look at A to B equals CD patterns, for example. This is a 30-minute chart that we're looking at. If you are watching us on TigerTV, maybe you're listening on the radio or your mobile device. And if that's the case, you can always catch an archive of this show on Channel 9. So we've got the A to B equals CD pattern that completed up at the top. That was a 1 to 1.618. There's A to B equals CD patterns within larger patterns. We're going to take a look at the larger one. This is on the way down here. If we start with the highs that were put in here at 9 o'clock in the morning on December 19th, and we come down to that price, well, I'll come back to that price. It looks like it was around 14.47 or so. If we come down to the lows put in right around the midnight time frame or so in the 14.28 level, that's going to be your B point. Your C point is last night at about 6:30 as the retracement was done in the ES Mini coming back up to about the 1441 level. What you will see is 1 to 2.618. That is where the ES Mini traveled down to as we at 1394. If you're asking what is a 2.618, there's certain Fibonacci expansion numbers that you want to use out in your toolbox out there. Those expansion numbers being 1.272, 1.618, and 1 and 2.618. There's one additional one. That's called that piece of pie, 3.14, and you know how it goes from there. Actually, probably know better than I do. Now, what we can take a look at here is if you take a look at that move off that C leg, explosive. Take a look at it where price is traveling. It's inside the C to D leg there. You had some decent volume, in just that short order of time. The market is not oversold. What the market did after it pushed down into the lows here, at about 820 or so, and getting down into 1391, it moved up. So I don't know if it was the plunge protection team or who was in there. But the prices did pull back up into the 1418 area where we're at right now. You're at 1418. And what you can see here, because it did get back into that oversold area, this is the EKG of the markets using the relative strength indicator. When you're trying to determine whether you should get in or where you should get in or what have you, you want to make sure that you're using this tool because you don't want to be chasing things when when you're up towards the top of that relative strength. You want to wait for a pullback, whether it's an intraday chart, a daily chart, weekly, monthly, whatever it is that you might be trading out there. And when you get to either of those two areas that you've got to digest. This case here was digesting the losses on the way down. What has the market done? You know that it's either going to move sideways or it's going to retrace back up. In this case here, after the first, and it's always about how the market responds to the news. It's not so much about the news. I mean, you can turn on the news and that's all they're going to talk about. We're going to be paying attention to how the market responds to the news here. So the market moves down, pulls back up to that 1418 level, where we're at right now, moves sideways, works off this oversold condition. And, of course, as we can see it here, if I blow this up on the screen for you, you can see it's really stayed below the midpoint level there. That says that the market here is going to go lower at least this morning. Where is the market going to end today? Where's the S&P? I can tell you the probability, the high probability of where the market is going to end is around 1410, 1400, 1390. So between 1390 and 1410, that is your range. The market, the S&P 500, closed at 1443. And with futures being off this low here, we're going to take a look at some critical areas for us to be paying attention to during the day, especially at the open. Let's go over to the daily chart. Let's actually go to the S&P 500. So let's go to the S&P 500 index itself. So we'll take a look at that. Give me a moment here to get to that screen. That way we can take a look at retracements. We can take a look at what else we've got here in that 1390 to 1410 level. What we can see is that even with those nice two up thrusts here, this is why you really want to understand your Fibonacci expansion numbers, your A to B equals CD numbers. What you've got here, as we pointed out, even as the market was pushing up on Wednesday, was it Tuesday? Tuesday. What it was running into was some resistance at that point, 786 retracement and the 2.618. That is a Gartley pattern that you're looking at on my screen. That is the 1448 level. If we take a look at a retracement here from the low I'm talking about is November 16th, up to the high that was put in on the 18th, what you will see is the 0.382, just a normal dead cat bounce area, takes you to 1408. I said the area where we're likely going to see the S&P 500 close out the session today around 1390 to 1410, really right inside that area. That is nothing more than just a normal dead cat bounce. If that's all the damage that it does today, not too bad. However, it's going to be about volume. And if the if the S&P 500 closes below or closes in that 1408 level, what it's really going to be doing, it's going to be taking out a swing point low. Well, that swing point low is December 14th. That level is 1411.88. That is a key number for you to be paying attention to at 4 o'clock today. And you get a close below that. You've got you've got a couple more levels. The swing point of December the 5th out there. That level is 1398. So that's that 1390 to 1398. That's an area that we're going to want to watch as well. But the all-out level that the ES Mini could, sorry about that. Normally I spend the morning here on the futures side as opposed to the index side. So my apology if I'm confusing you, confusing myself. is going to be that November 28th level. That swing point is really where the bulls stepped in, because there was a bit of a sell-off that had started the night before. You then saw that in the morning session on November the 28th. That's really where the bulls stepped in. That price point, that line drawn in the sand, 1385 to 1410. So it's that 1410 number is likely where we're going to see the S&P 500 close. Now, if it closes well above that, that's going to give you a pretty big signal there that instead of delivering coal on Tuesday or Monday evening, that Santa wants to deliver to you higher prices. Now, the markets are going to be open for half the day on Christmas Eve. We here will be closed, so you'll be hearing the reprogrammed shows out there. We will be back with you bright and early on Wednesday morning at 9 o'clock. So that's on your S&P. That is on the, let's go take a look at the Dow futures out here. If we take a look at the, give me a second here. Let's take a look at the daily chart. Let's go to the daily charts here. And then we're going to, when we come back from the break, which is in a couple minutes, we're going to take a look at the New York Stock Exchange. We're going to look at silver. We're going to look at gold out there. We can look at anything else that you want as well. You just have to give us a call at 877-927-6648. So we can see here on the daily chart of the Dow, you know, as far as the daily chart's concerned, it's not in overbought or oversold territory here. And if we take a look at what the Dow futures did, is they came right down into that high of November 28th. That's the point where the bulls really last stepped in. The high of that candle is 12,967. That right there is where the bulls are sitting there. We'll see if they're going to show up and support price today. It is a quad witching today. We do have options expiration today, so it's going to be volatile. It was set to be volatile. If you are a newsletter subscriber of mine, you know that for the last 3 days I've been identifying areas of divergence in the market as the markets moved higher. The markets have been giving signals, even on this move up, that there was something wrong in the river city out there, and certainly we are seeing that today. You can blame it on whatever you want to. The signals were out there all along, so we are going to see a sell-off. And the question is going to be how far into that November 28th level on the on the Dow futures are we going to see a pullback? This could easily, in the Dow here, be setting up an A to B equals CD down. Let's go take a look at that. Why do I say that as well? Well, you can see that the retracement level, almost an exact 0.618. We know that it got up to the trend line. That is a normal place on a retracement where a market, where an equity, where anything that you trade would bounce up to. Oftentimes, that is what sets up the A to B equals CD down. I suspect we're going to see volume. The A to B equals CD down on the Dow futures takes you all the way back to 12,153. Of course, when we come back and we take a look at what that area is, all that's doing is coming right back into the June lows. And for a long time, we've been talking about the markets going back into those June lows. Those things get cracked. It goes all the way back to October. But one thing at a time. As we take a look around the world here, you've got the DAX off 67 points, the FTSE off 45 over in Asia last night, Nikkei off 99 points, the Hang Seng down 153, the Shanghai off 15. Gold right now up $3, silver up 17 cents, King dollar up 20 ticks, out at 79.52. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So the first place that we want to spend some time is with the New York Stock Exchange chart. This is going to be perhaps the key chart of the day here. Now, we'll see when it opens in 6 minutes. And what I'm referring to here is New York Stock Exchange has been the strength inside the market. Of all of the chart patterns to be paying attention to, it has been the New York Stock Exchange. It still will be the New York Stock Exchange because you want to understand what patterns, what forms here in your strongest of indexes. It's not Apple. We're going to take a look at Apple from a weakness standpoint because, as you know, Apple is weak. Apple is not even close to strong out there. Apple this morning is going to be gapping down into its bullish engulfing from a few days ago. But let's stay here with the New York Stock Exchange because this is key. Number one, we know that the New York Stock Exchange has been the first index up into the September 14th level. Got up there 2 trading sessions ago. Got up there, rejected that area, closed just $1 or so above the September 14th high. That high was 85.1560, closed at 85.1643. That's not exactly what qualifies as a real breakout. So you're up against an area of resistance here. But what's important as I pull this back and I open this up for you is what you're going to see here, and this is what we're going to be paying attention to in 5 minutes, is this going to create an island reversal candle formation? And that would be really a 3-day, 4-day, 5, would be creating these last 3 trading sessions here as your island. Now, the key here is that it has to open up below 84.16 and 7 pennies out there. It opens up below that area, never gets above 84.1607 during the day. This will have formed an island reversal. That, folks, is absolutely the most bearish candle pattern that is out there. And whereas that's an island top reversal versus an island bottom reversal. And you can take a look at the New York Stock Exchange, just simply to come back and identify the last island reversal that was out here, and it was right down here at the June lows inside the New York Stock Exchange. That is a significant area. If that ever gets broken, that'll be sending out a huge message to the marketplace. You can see the New York Stock Exchange is up in that overbought area. So where this opens and also how it trades intraday is going to be very, very key. So this is the chart, that we'll come back to when the market opens here. I suspect it's going to try to gap down into that area or below that area. So the gap seems like that is going to take place here at the open. But if you are long and you see the New York Stock Exchange, because that, folks, that is the breadth of the marketplace. That's not the Dow 30 stocks out there. That's not the S&P 500 stocks out there. That's not the NDX 100. That's 3,000 stocks here, 3,100, 3,200 stocks. That is the breadth of the marketplace. This has been the strength, and here's where we'll get some type of clue. Now, if it gaps down and it doesn't create an island reversal, that doesn't mean, woo, you're out of the woods. It's just that if it does, that means you don't want to necessarily be in the woods here with, you might want to consider tax-wise and everything else, perhaps taking some profits out here. That's a serious reversal that would be out there. If we take a look at some other leading indicators, we know that looks like now we're going to have the markets perhaps catch up to the direction that we've seen gold and silver traveling in the commodities. Let's go take a look at the larger patterns out here in silver. So let's start with silver. Silver trading out right now at $29.96. Silver up against a very huge trend line, resists a support area. You can take a look at that trend line. This is coming off of the lows back in August of 2008 out here. You can see it used to be each of the QEs that held things up. QE3, the market has just kind of said, nah, it's not going to really impact it. You can see here, looks like the low of that trend line it has been tested here this morning. Silver really traveling right on it. If you break through this area, if you break through with conviction, a few 50 cents, 75 cents, not a big deal out here. What it does say is that silver will at least pull down to the lows of June, the week of June 29th, 2012 out there. So you're going to want to pay attention to a long-term silver chart. If we go take a look at Goldilocks out here, using the same chart pattern going back into the 2008 time frame. Well, we know that gold broke that pattern quite some time ago, came back, tried to get back up in it in September 14th, and it really failed, got back underneath that area as we came into the October time frame. That's one of the reasons why I've been more bearish than bullish on gold, just simply when you break those trend lines and it gets back up inside it and it can't hold and it gets back down below it, that is not a good sign out there. That is absolutely not a good sign. It looks like gold, if we just simply take a look at retracements, well, we know we're underneath the swing point. When you get underneath the swing point, this is a weekly swing point, says you're going to move down to the, to the next swing point. Really looks like that could easily be the lows out there. If we do take a look at retracements here real quickly off of the last swing point low, the week of May 18th, all the way up to the high here on October 5th. The gold is at the 0.618 level. That's at 1630 or so. Fails there, 1560, maybe all the way down to 1530 would be the next stop. 877-927-6648. Markets are going to gap down. When we get back, we'll go back to the New York Stock Exchange, see what that stock chart looks like. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 127, S&P down 15, Composite off 51, small caps off 7, New York Stock Exchange down 95. It did gap down, but it did not form the island reversal pattern. So if you're bullish, you can swipe your head, although you're not out of the woods here whatsoever, because you have gone ahead and tested a swing point high. You did get into overbought condition, and it is certainly going to be correction time out there. As we take a look at things that are popping and dropping here in the marketplace. Nike popping to the upside, up $4. That's up 4%. You've got Ameristar Casinos. Or do they have a buyout? What's going on? ASCA is the ticker symbol, up 17% out there. Pinnacle Entertainment to buy. There we go. Okay, so that makes sense out here. Red Hat, I believe they might have been out with numbers. RHT is a ticker symbol. They're up 4% here this morning, up $2 and change. To the downside, Priceline down $12 right now out at $6.18. Apple off about $10 out at $5.12. Google off $7 at $7.15. Intuitive Surgical, they are absolutely getting just demolished out there. Down another $8 this morning. That's 1 6/10%. MasterCard off $6. Equinix off 4 or 5. Chipotle off about $6. Amazon down 4.5. Panera Bread off 4.5. Fossil down $3.99. So I switch over here, take a look inside the Dow, see if there's anything green. Nothing. One stock, Merck. Merck is up a penny. Otherwise, everything in the Dow is down. You got Caterpillar. We'll take a look at the Caterpillar chart out there because it did come back and test a support area. However, it looks like it's going to go ahead and move through that. IBM is off $1.40, Boeing down 151. So let's go take a look at some of these stocks here that are moving. Let's go over first. We'll start off with Apple. Apple gapping down this morning, trading inside the swing point of December 17th. The high of that is 520. The low there is 501.23. We'll go ahead and put this on a quick intraday 5-minute chart because you got major volume coming out of this thing today. It's only been open for 6 minutes and already 7.8 million shares in Apple. That says here the hammer candle is going to get tested again. That's at 505.75 level. I suspect the bullish engulfing will get tested. That's at 501.23. What we can see here on the daily chart of Apple, we know that it was getting into the oversold zone just simply by using this relative strength indicator out here. And you can see all it did was just, gapped up, but not gapped up. It moved up a little bit, really traveled sideways to work off that digestion. And so now you've got volume coming back into the swing points here. 27 million versus the hammer is the one that you'll really be paying attention to. That's got 45 million shares. Let's put this on a 5-minute chart here. Of course, you can see just huge volume. We'll see if this continues throughout the day here, at least the early morning hours. Let's go take a look at some of the other stocks here. I mentioned, we were looking at Caterpillar yesterday, so let's go take a look at that. That here, jumping the creek here this morning, that's an area that originally was a resistance level. What I was using there, that's the black horizontal line going across the screen. A lot of great patterns out here, quite frankly, on the Caterpillar chart. CAT is the ticker symbol there. So just take a look at the number of chart patterns that you can learn from here today. First, you've got an area of horizontal resistance that was really set up by the gap down on September 25th. You could certainly use the high of that candle if you wanted to, but it wouldn't help you to understand where that resistance zone was. You want to take a look at an area around that price point where you see resistance. In this case here, was really set up both by the downdraft on November 2nd, when Caterpillar actually gapped up that session and traded off the entire session. As price moved back up on November 6th, it got up in that level, gave it up. And then you got a little doji candle out here on December the 12th. So that really, and we also tested that area on December the 13th. Not a shooting star, but it looked like a shooting star duplicate out there, but it wasn't, but still an area of resistance yesterday as the equity moved down. Now, what Caterpillar did was it completed a 1 to 1.272 A to B equals CD. I'm going to go ahead and get rid of that pattern here on the screen. We covered that certainly yesterday. So, and it really just as perfectly as you possibly can do out here. We'll get rid of this retracement level. And as it did that, folks, what it did was it created a shooting star candle. That is the inverse of the hammer candle that we looked at on the Apple chart out there. However, whereas a hammer has a pretty good opportunity to get tested. The probability is higher on a hammer candle than it is on a shooting star. And I don't know why that is. I just know that it is, and that's a good thing to know. So you have Caterpillar has that shooting star. Then you get additional confirmation yesterday with a gap down. Now, when you break through a resistance area, which is, in fact, what Caterpillar did, old resistance becomes what? Becomes new support. So look at what Caterpillar did as it moved down yesterday, moved right back down into that old line. Now, of course, today, jumping right through that, Caterpillar now on its way down. You've got your second gap in a row. Maybe it'll make a exhaustion gap here in the not too far distant future. Well, that didn't sound that great. But it looks to me like Caterpillar wants to move down to at least the 0.6 rate, most likely, I'd say come, quite frankly, all the way back down into the November 16th area. But the next step down for Caterpillar is going to be 84.62 as it moves down. It's got volume in it behind the move here this morning as well. 2.6 million shares. Yesterday did a total of 7 million shares out there. Let's take a look at a couple other equities here that are popping and dropping. Then we'll go inside the S&P. We'll go in to take a look at the financials sector, the energy sector, and the technology sector, and see how things are going inside there. Let's go take a look at Priceline. Let's see what Priceline is doing here this morning. Let's just, put up the show charts. And even if I've got it up there, I'm just going to duplicate it. So PCLN, that is the leader in the clubhouse on the way down dollar-wise. So Priceline here, probably will come back down and test this area of support. That's going to be the horizontal line drawn off of the lows of November 15th. That's at 611.55, trading out at 622 right now. I haven't taken a look at MasterCard in a while. Let's go take a look at MasterCard, see what that equity is doing. That is down about $6. I need to refresh my screen here. That way we can look at an accurate chart. Looks like MasterCard here may have been testing some highs. So let's go see if this is trying to get back inside its range out here. Come on. Don't tell me I have a data feed issue here this morning. I don't need that. There we go. So now as we take a look at MasterCard, let's see. Okay, so MasterCard yesterday up at all-time highs with some pretty decent volume up there. Did 935,000 shares. That was taking out a swing point that had only 849,000 from December 3rd. So MasterCard looking pretty good. And this morning here, volume 200,000 shares. So it's got a little bit more volume than you like to see perhaps at the open. But as a stock chart looks, no real sellers here in MasterCard. So it looks pretty darn nice. And that's the opposite of Intuitive Surgical. Brain salad surgery is what they are having out there. ISRG. This thing here moving down again. Boy, it has had several days of conviction to the downside here. This is taking on the swing point low, which is going to be the price point of 467.26, trading at 483.29 right now. But even as it moves into that swing point, it's coming in with far too much volume on that July 23rd day. Weekly on a weekly basis as well, I'm sure. So it's going to try to chip away and break through that. And if we take a look at A to B equals CD patterns, we'll come off of the high on Intuitive Surgical. That's the April 18th high. That's at 594.89, down to the B point that it's trying to mess with, which is July 23rd. That's your B point. Your C point out here looks like you're probably going to go ahead and use the high of December the 18th. So an A to B, 1-to-1 A to B equals CD, $426. We go further to the left on the chart here. Looks like what it really wants to do is get back into the area where it last had gapped up with any significance. That was on October 20th. That price point is actually $413. Looks like that is where Intuitive Surgical is headed here in the short term. Let's go take a look at some of the spiders out here and see what we've got going on. They'll start off with the energy sector. So the energy sector here gapping down this morning. Of course, we're going to see everything really gapping down. So that is not news out here. Let's get rid of some of the lines on the chart out here. And so you've got this trend line that the energy sector, this is the trend line that we're taking a look at, folks. It goes back to the September 14th high. Then you can use your next two touch points being October 18th. That was at the price of $75.19, as well as the high at $75.10 on October 19th. Brooks above that, it's going to come back and test that area. But I suspect what the energy sector is really going to do here, if the markets, in fact, do move down today. Again, right now you've got the S&P at 1429, and I think there's a more likely outcome that you'll see the S&P at 1410 to 1390 by the end of the trading session. So what does that set up? That sets up the energy sector coming back down and testing an area of tested support out here. That is the gap up. That is the on November 19th. That's the low of $69.81. But so far this morning, not looking too bad out there. Let's go take a look at the financial sector. Financial sector being the strongest out there of the inside the S&P 500. So just like we pay attention to the New York Stock Exchange, really the financial sector that we should be paying attention to with inside the S&P 500. So as we do that, we can see the 1.272 Gartley butterfly pattern. I just erased it so you can't see it anymore. Let me draw that back in there for you. That way, for those of you that are watching on Tiger TV, you can see that little pattern out here. It has not completed that area. That in order to complete that, you would have needed a price move up to about 1682. The XLF got up to 1670. We're going to say that's a completed pattern because that is close enough for me in my work out there. Could move higher, but so you've got basically a completed 1.272 butterfly expansion. Right now, the first level of support, it's untested here, is really this gap up from December the 17th out there. That means if the XLF closes underneath 1634, the next area will be the swing point, which is down here on December 14th at the 1598 level, and that is where the XLF would want to travel down to. Let's go take a look at the technology sector, see what the technology sector is doing. That is the largest weighting with inside the S&P 500. That is the XLK. So let's go see what the XLK is doing here. You know, and of course this looks almost more like the chart of Apple than it does anything else. So the XLK coming down, let's draw the area of support out here. Can you see that area? As you look at it on my screen, it's not these two red lines. Those were areas of resistance out here. But where would you draw, if you were taking a look at this chart here, where would you draw the area of support on the XLK? See, I think it's pretty evident. Number one, you go take a look at those open windows as the market's been gapping up and gapping down. Those are the easiest areas to identify places of support and resistance out here. So you've got an open window. That is on November 23rd. If you use the low there, which is 28.53, draw the line straight across. That's what we're going to do. That's now in black. You can see that area having been tested multiple times out here. November 28th was a test. You had another test out here on December the 6th. Now you've got the gap down. Says that the technology sector, let's get rid of the volume line down here at the bottom. In fact, I'll draw that on the bottom here. We'll draw the correct volume line. That is going to be off the November 23rd candle out there. And so you're going to want to watch as the XLK pulls back into that area. It'll give you an idea as to whether or not this area will hold as support. It has so far. Volume-wise, what you'd like to be able to see is as volume or as that area gets tested, you'd like to see it do it on less than 8.2 million shares. So far today, in 17 minutes of trading, you've had about 1.2 million shares, so 1.2 going in 8.2. If this type of pressure were to keep up, it will have the volume. Now, whether it tests that area or not is another thing, but you want to come back to that. Let's go take a look at a couple of equities here. Had a request to go take a look at Walgreens. Let's go take a look at Walgreens out here. WAG is the ticker symbol. Let's go see what Walgreens here is doing, gapping down this morning. Let me just refresh my screen out here. Make sure that we've got everything as we take a look at this. This thing is in a fairly large consolidation. If I were to ask you, as you take a look at this chart out here, where would you draw your line of resistance? It should be pretty clear to you. Again, you don't have to know anything about technical trading. Right now, all we're doing is just simply drawing lines in the sand. You want to maybe first start off being able to do that. It's relatively easy. If we take a look at, each time the price gets up into this area here, let's draw the line across the screen. We'll go ahead and we'll put that in black. You can see here's your areas of resistance. It's your swing point highs out here at September 16th. That level is 37.60. So it's right around there. You can also see if you come back here to a swing point, back in August the 16th, 2011, out at 37.61. Look at Walgreens as it moves up into that area back here in October 3rd. Gets up to 36.90. You can see how that area has really acted as resistance. What Walgreens did here recently is it got up into that area again. Volume-wise was 8 million shares, 9 million shares, 8 million shares yesterday. So far today has had 3 million shares to the downside. So if you can't bust them up, what are you going to do? You're going to go ahead and try to bust prices downward. In this case here, with Walgreens had a real nice sign of strength out here. That was the day of July 20th. But where Walgreens should travel back down to is the swing point low of November 16th. Just like many things out in the marketplace. That low, 31.88. 877-927-6648. We come back, we'll go and take a look at gold and silver with Lou from Nashville. Dow is off 132. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain obtain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. King dollar up 31 ticks right now out at 79.62. It's really all about the euro and the Japanese yen here. Let's go ahead and get rid of this A to B equals C to. The euro here has given us a couple of signals, several signals, quite frankly, that it is tired of moving to the upside here. You did have the euro form this dragonfly doji. Also, it could be called the shooting star candle. That was the candle from December 19th as it was testing the highs out here on May 1st. Then yesterday you have this little high wave candle out here, also indicating that it was tired. Today you're getting follow through to the downside. You got a bearish engulfing candle, and the euro, what the euro is doing, it's testing that old area of a resistance that we'll see if it can act as support. If you get it closed back below, we'll make it the easy thing for it to do. Back below 1.31676, just slightly above that, the euro will be back in the bottom half of its range out there. You had Nike is moving up nicely. Let's take a look at Nike here real quickly. A couple things that you can learn from this stock chart for sure. Number one, Nike makes a high volume low. June 29th, gaps down with 21 million shares. Nike came back, and now that was, I said, with 21 million shares, came back and tested that level on October 26th with 3 million shares. Test the high. Didn't test the bottom there. Came back and tested that level here on November 14th with 3.2 million shares. You gapped up out of there, not with any real sign of strength, but you did gap up out of there most certainly on November the 19th. And now today you've got Nike is over a swing point. The swing point here is September the 12th. That has volume of 2.2 million shares. Already today, Nike has done 2.1 million shares. Nike has a confirmed A to B equals CD in the 105.46. I do not think Nike will get much above the current high that it's already had. If you want to see how Fibonacci numbers work here, and they work, folks, and you want to pay attention to these, we're going to come off of the high. I'm going to just simply draw the Gartley pattern that's in here, because it is a Gartley sell. However, I wouldn't be trying to sell this Nike here just yet. And if we take a look at it, you'll see that the reason why I think that today's high so far will likely hold is because what it's up against a 0.618 retracement. That's off of the high in Nike that goes back to May 3rd, 2012, down to that high volume low out there. So you can see it's made about a 0.618 retracement. It's also an expansion of the swing points. Your B2C expansion 1.272. That's why Nike has just stopped in that area. I do believe it looks like Nike wants to travel higher out there. And why? Because it just wants to just do it, right? Isn't that the Nike theme out there? Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you today?
Hi, how are you today?
Excellent. You want to take a look at gold or silver? We got about a minute left here.
Right. Yeah. Okay.
Which one?
Silver.
Silver. What are you doing, and how can we help you?
I'm not doing anything yet. I'm just wondering when's a good time to get in.
Won't be until the bulls show up, and they will give you some type of bullish candle out there. I think you're more likely to get that bullish candle confirmation from gold versus silver here. If we take a look at the daily chart on silver, it'd be pretty tough to see a reversal candle here. As I showed in the opening segment on the weekly chart, what silver is doing is silver is really up against an area of resistance. Doesn't mean that you couldn't take a trade here because you're up against a long-term area of resistance. So just depends what type of risk-reward parameters you want. But your back is up against the wall on silver. The problem is that you're having the euro here start to pull back. And that is suggesting that it wants to pull back further. Is the correlation between the dollar and the commodity is going to come into play here? Gold is the one that could give you the biggest reversal signal today, and that is with a hammer candle. If gold can close at 1655 and not even go much higher during the day, you might have a hammer candle, and that would be a metal that also had completed a 1-to-1 A to B equals CD, and that would be a bullish reversal signal. All right, my friend?
Super.
Merry Christmas to you. You bet. Be safe this weekend. Folks, thanks so much for being here. Stay tuned. The Nadex Bull Bear Binary Option Hour up next. Tom O'Brien, Daryl Martin, and myself will be with you. Have a safe holiday out there. If you are taking off, travel safe. And again, I'm so grateful for your presence each day. Have a great day. Have a great weekend. And see you soon. Bye-bye now.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.